Hey, what's going on, guys? This is Daniel, one half of the Clock Brothers. And yes, today it is just me today. And in this video, we're going to talk about what is most likely going to happen to the real estate and housing market if another lockdown were to occur. Now, especially with this whole new Delta strain that's going on, and I'm assuming next year we'll have the American strain, and the year after that, we're going to have the United strain, and then the Spirit strain, and then the JetBlue strain, and then the Korean Air strain. We're going to have all sorts of strains happening year after year after year. But even with that said, of course, guys, it's bringing up a lot of questions. It is a hot topic right now amongst the media, amongst social circles, on whether or not there's going to be another lockdown. And of course, what we're going to talk about and address today in this video is how is the real estate and the housing market going to be affected by all of this. And of course, guys, I have my thoughts. And well, the first thing I believe that should be tackled is the low-hanging fruit, which is commercial real estate. Because obviously, if another lockdown were to happen, well, what does that mean for restaurants? What does that mean for retail stores? And what does that mean for a lot of the small businesses in the United States? Well, it pretty much means it's going to be like the first time, where a lot of retail stores, restaurants, gyms, and you name it, a lot of these small businesses are unfortunately probably going to close because, well, if it didn't wipe them out the first time, it sure is going to wipe them out the second time. And the thought that immediately crosses my mind is what it's going to do to the commercial mortgage-backed securities market. Because obviously, a lot of these commercial mortgage-backed securities rely a lot on small businesses, retail owners, and a lot of businesses that really rely and depend on your physical real estate locations, the strip malls, the office spaces. They rely on a lot of those to make sure that the CMBSs stay afloat. Now, right now, we're already at a rate where the Fed is purchasing commercial mortgage-backed securities in general, at a really alarming rate on a monthly basis. You're talking $120 billion worth, $40 billion, of course, is going to mortgage-backed securities every single month since the month of December. So one would question, do the Fed not only continue, but are they going to have to double down? And of course, the more the Fed purchases these notes, we don't know what's going to happen to rates. Is that what's going to keep rates super duper really low? Is the Fed going to have to step in even more? Of that balance sheet going all the way up to $20 trillion, is that going to occur because of a potential second lockdown? Now, that's one end of the spectrum in terms of obviously retail, hotels, gyms, everything closing because of the lockdown and those businesses suffering. Now, the second aspect is the employee side. What about all these individuals who were employed by these small businesses, employed by these gyms, retail stores, and et cetera, because, well, it just so happens that 47.5% of your entire American workforce is employed and are employed by small businesses. Now, having said that, does that mean that every single one of these small businesses are completely dependent on the lockdown shutting down or not? Well, not necessarily, because, well, the business that Sam and I own together, it doesn't really matter if there's another lockdown because our business is all digital. So granted, you're not going to have all 47.5% of individuals get released, get fired, furloughed, whatever terminology that they want to use. But I'm willing to bet that it's a pretty solid number. As a matter of fact, right now we have a problem with institutions and small businesses being short-staffed. Restaurants obviously being a main indicator of that. So if the lockdown happens once again, and all these people who are excited to go out and eat again, excited to go back to the malls, excited to go work out at the gym again, as opposed to just doing push-ups at home, are these people who are so eager to get back into work and contribute to our economy, are they going to find themselves back in the couch once again? And of course, that leads us to another question. Well, is government spending going to have to increase even more? Is unemployment going to have to increase even more? And well, are we turning a situation where we're kicking a can down the road to kicking an entire trash can down the road? Is that what's happening right now? Which, by the way, on a side tangent, is the second lockdown a case for universal basic income? Is universal basic income then going to hedge into our big inflation conversation? And does that lead potentially to the Great Reset? Of course, we don't want to go down that rabbit trail today, right? Because today we're talking about the real estate and the housing market. Now, speaking of the housing market, because I think it's pretty clear what's most likely going to happen in the commercial real estate market if another lockdown were to happen again. But now let's talk about the housing market. Yes, the housing market that affects all of us. The housing market that's been on fire the last 18 to 24 months. Let's go ahead and talk about that. Well, what is most likely going to happen? Well, if we think about what happened during the last time we had a lockdown, the last time and really the first time the world ever heard of COVID-19 or any of the bats or Wuhan. I didn't even know where Wuhan even was before anything happened. But now apparently they're throwing a bunch of raves and parties in Wuhan right now as we speak. But of course, the last time and the first time this happened, we saw the housing market rally. We thought that it was going to dip. We thought this was going to be the recession. We thought this was it. We thought this was going to be 2008 all over again. This is what we've been waiting for. But of course, that did not happen. Of course, the last 18 months to really the beginning of when all this happened, which was March of 2020, we saw the median home sales price increase 24% in a span between 12 to 24 months, which last time I checked is the largest rally that we've ever seen in the housing market. And we saw the median home sales price go all the way up to the record high, the highest it's ever been in the history of the United States of America, to $375,000. Now, if we think about why this all happened, for me, I think of the big three. Now, what is the big three? First and foremost, the Fed dropped their rates down to zero. The Fed believed it was within emergency parameters that they dropped the rates down and plummeted all the way to zero, which of course saw us having mortgage rates the lowest we've ever seen it in the history of the United States. I believe at one point dropping all the way down to 2.6% for traditional 30-year conventional mortgage, which for me is absolutely bananas. Let's talk about the second thing, which was government intervention. We saw a lot of government intervention in terms of making sure that the economy would stay afloat, and also the housing market being artificially boosted by government intervention. And last but not least, in terms of the third thing that contributed towards the housing market rally despite a pandemic, which was an already existing strong buyer pool, as of course, as of March of 2019, the market saw the longest rally that we've ever seen, the longest bull market that this country has ever seen. Well, of course, if you have consecutive years where credit's great and we have pretty much bubble everywhere we look, you're going to have a lot of individuals with a lot of buying power being able to purchase homes cash $20,000, $30,000 above the asking price. And well, we can blame it on inventory all we want, but in terms of houses being made available in inventory on the market for people to buy, we really didn't see that much of a difference comparing this year to last year, the year before, and even the year before that. It just so happened that homes are flying off the shelves a lot quicker than normal. And at the same breath, a lot of people who are saying that it was 2008 all over again were somewhat disproven, considering today the average American has more equity than it has ever had in the history of our country. So we're seeing a lot of crazy records. And on top of all of that, because of the pandemic, the Fed decided that it was going to lower what's known as the statutory liquidity ratio all the way down to 5%, which gave banks much more room to be able to lend out, which gave them room to do forbearance programs, which in my personal opinion, they didn't do the greatest job in. But hey, that's neither here or there. But all these things that we're talking about, interest rates being brought down to zero, government intervention, homes flying off the shelves, consumer confidence and strength that was built up over the last 10 years. And of course, the Fed doing what it did with not only buying as much as they can in terms of private securities and also, 10-year treasuries and also mortgage-backed securities, and also lowering the SLRs. The big question is, are we able to do that again? If a lockdown were to happen again, does the government, does fiscal and monetary policy have the cards and have the room to be able to do everything that it did? Everything from PPP to forbearance to dropping down the rates even lower, potentially to the SLRs, everything that we talked about and everything that's been discussed in the finance world of YouTube the last 12 to 18 months. Do they have the cards and the capability to do that again? And that, my friends, my answer is no. There's absolutely no way. Without continuing to kick the can down the road, without going into even more extreme levels of government intervention and the Fed intervening to make sure that the market does not correct itself, there's no way that we can see a housing market survive a second lockdown. In my opinion, it's just not possible. If the second lockdown were to happen again and small businesses were to be hurt the same way they were hurt 12 months ago, 18 months ago, and not only that, but even affecting these big boys that own a lot of these retail shops, a lot of these office spaces, a lot of these big pieces of real estate that are going to take a hit if the second lockdown were to happen again. Well, if we see all these things happen and big corporations also have to make cuts, which a lot of times history will tell you when cuts have to happen, it typically tends to start with the people. If we see unemployment go up and higher again, well, first and foremost, how far can they kick the can down the road with these other programs? And same thing with eviction moratoriums. Are they going to have to extend the eviction moratorium even more into 40 years later? Are we going to make it into a permanent law? I just don't see us surviving this. I just don't see the housing market and even these individuals, right, that are being let go, unemployment being, higher and higher, like we just talked about momentarily. I mean, these people have to pay rent. These people have to pay a mortgage. And on top of that, we still have millions of mortgages and forbearance. I mean, I just don't see a scenario where the housing market and the real estate market predominantly can survive another lockdown. And here's something that we haven't talked about yet, and also why I say no is because I do not see the same cycle that happened a year ago up until now happening again. Now, what am I talking about when it comes to this cycle? Well, it's kind of like the chicken or the egg, right? The horse before the cart. So you have the market that's really, really high. And individuals, because it was such a high market, decided to sell. They were motivated to sell. And they say, well, if I sell my house now, they did the math on their kitchen table, I'll make $80,000. I'll make $90,000. And I'll get all my principal back that I initially used to buy my first house. So what happened was they sold their house cash. And because they sold their house cash, that now gave them enough dry powder to hit other aspects of the market because, well, those individuals who sold their homes, they still need a place to stay. And a lot of individuals downgraded as well. A lot of individuals in their 50s and 60s saw it as a great opportunity to, empty out the house, right? They're empty nesters. Now is the time to sell. Johnny is away at college. So let's sell the house now and move into a condo or a townhouse. And in that way, their buyer pool was almost self-repeating because what happened is you had these individuals take their cash, go into what's known as the starter home market, which is the market between 200,000 to 300,000 or 150 to 300,000, depending on what state and city and market you're in. They now entered the starter home market and they beat out all these other offers that were FHA, thus creating the affordable housing crisis problem even more than even before the pandemic, and also thus creating even more competition in the market, which of course makes the market hotter even again. And that, my friends, is where we go back to square number one, where market gets hot. They believe that now is the right time to sell, and the cycle happens over and over and over again. Well, in this case scenario, without that government intervention, without that artificial boosting, without the quality of buyers, because remember, when we're talking buyer pool, we got to talk quality and quantity, right? How legitimate is the quantity of the buyer pool? We got to talk about these things. So for that reason, guys, that's another reason why I think I'm giving a big fat no in terms of will the housing market rally if another lockdown were to happen again. So again, guys, obviously this is all speculation at this point because, well, the second lockdown is just in mere conversation. It's just a possibility at this point, but who knows? Let me know your guys' thoughts in the comment section below. What is going to happen to the real estate and housing market if a lockdown were to happen again? Do you think this is all legitimate? And I understand I'm opening up a can of worms when I ask that question, but let me know in the comment section below. And of course, guys, share this video because, well, if we can continue to have conversations with our peers, individuals that we deem to have a very good opinion about this matter, well, the better and all smarter that we can be. And of course, the better we can maneuver these types of markets together. So with that said, guys, thank you so much. Don't forget to like this video, subscribe to our YouTube channel, and share this video with your friends as well to spark a great conversation. So with that said, guys, thank you for watching, and I'll see you guys in the next one.